good morning, and welcome to today's live technical analysis. We're going to be starting off with the euro against the dollar. As you can see, since yesterday, the pair has broken below our support level at the 1.0580 level and is now currently aiming for our previous S2 level at the 1.0460. Note that the RSI is still below the figure of 50 and is running along the figure of 30, implying a strong bearish market sentiment. The pair continues to validate our downwards moving trend line, but could even be added with a much fresher at this swing high, but slightly lower in order to indicate the changing structure of the pair. So it's moving in a downwards fashion. The Bollinger Bands also appear to be moving in a slightly downwards fashion as well. So purely from a technical basis, we're seeing that the pair may be moving in a bearish sentiment, so towards lower ground for the next few days. So given that it's broken below our support level at S1, we're going to be readjusting our support level at the 1.065 level. So this will be our new resistance level at R1. Previous R1 will become R2. Now, what I'm going to be noting is that given that we're going to be placing our resistance level at R1 and R2 fairly close to each other, in order for a bullish outlook, it would need to break above both R1 and then R2. Why? Because if it simply broke above R1, it could slightly consolidate before moving lower. So for a bullish outlook, it would need to break above R2 as well. And we're going to be keeping our previous R2, which is going to be switching to resistance level at R3. And this becomes R3. Feel free to chart this as well yourselves in order so that you can follow along. And now we're going to be readjusting our view for support level at S1. S1 was broken and is currently moving lower. So for our new support level at S1, we're going to be going back, seeing the historical data. So right now I could see perhaps 2 points. This could be potential support level at S1 or right around here at this swing low. Price action is currently closer to the first level that we placed. And why had I placed potential support level at the 1.05461? Well, simply put, I'm seeing a very strong bearish sentiment at this point in time. Just note the bearish candle, which rapidly decreased. It found support, and I'm not taking the wicks into account. I'm simply taking the opening and closing of the bullish and bearish candles. It got validated on 3 separate occasions, 1, 2, and 3, perhaps slightly on the 4th. It's also coinciding with this previous support level upon which it moved higher. So validating it once again. In order to provide some space between S2 and S1, we're not going to be placing our support level here, because if it's around this point, it could simply have been about 48 pips, which, as many of you probably know, could be easily broken within a day or two. Therefore, in order to increase the distance between support levels, we're going to be placing it at a slightly higher level. It does not mean that the place we had mentioned before is not a support level in itself, but simply a support level I'd rather ignore at this point in time. So this is S1 1.0545, and then we're switching R3 to S1. Just place this here. From a fundamental point of view, ECB Halsman yesterday hinted that the bank may have not reached its terminal rate. Now, despite his comments yesterday, if we go on the daily chart, it's still moving in a downwards fashion. Therefore, it appears to not have had any significant impact on the pair. What is interesting, though, is that the most market analysts are anticipating that the ECB has reached their peak rate. I personally slightly disagree with this point of view. I still think the ECB may hike perhaps once or twice before remaining on hold. And why am I saying they may hike once or twice? Well, in comparison, the ECB has to take a numerous amount of countries into consideration. It's not simply Germany, it's not simply France, it's Italy, it's Greece, etc., etc., etc. I believe that the ECB considers inflationary pressures in the future to be of a greater risk than remaining on pause now in order to alleviate pressures from the economy and then having to hike again in the future. I think that would be a wrong approach to combating inflation, and thus I believe that the ECB may consider we'd rather the economy takes the hit now rather than in the future so that we can get it over and done with. In comparison, the Fed simply has the US economy, which is the largest economy in the entire world. So it does have some gravitas as well, but it's simply one nation. It's much easier, in my opinion, to control a nation, whereas with the ECB, you have the different politics from different governments, etc., etc. Therefore, perhaps a hike or more by the ECB. But the markets appear to have not taken that into account. Therefore, from a technical basis, we're maintaining a bearish outlook, but on a fundamental, perhaps on the long run, it's a slightly bullish outlook. But for now, we have R1, R2, R3, S1, S2, and S3, and we're maintaining a bearish outlook for the pair. We could even draw a downwards moving trend line, another one as well, from this point here. So this could be a potential order block moving lower. Note it's still at the lower range of the Bollinger Bands as well, further validating our opinion of a bearish outlook for the pair. So for cable, it's also broken below our support level at the 1.26, 1.2167 figure, broken below. It broke below our very narrow downwards moving channel. As we had stated yesterday, it was far too narrow, but nonetheless, we had placed that this appeared to be validated. It has now broken, so this, in my opinion, is now invalid. Downwards moving trend line, broken below S1, currently aiming for S2. Since it's below the RSI of 30, now we're expanding this, so it's actually at 22. It's below, so this could actually even mean that it is oversold. So I would not be surprised if there is a small market correction higher, perhaps to the mid-range of the Bollinger Bands before the pair continues moving lower. We're also noting once again the core PCE rates for the US, which are due to be released on Friday. In terms of today, there is nothing major to note. Perhaps the Czech Republic's interest rate decision, upon which the bank is widely anticipated to remain on hold. But other than that, we will have Australia's final retail sales in tomorrow's Asian session. But since they are the final figure, I do not expect them to have any significant impact on the market in terms of the Aussie against the dollar. So back to cable, maintaining a bearish outlook. Perhaps we could even bring RS1 slightly higher, which is now R1, 1.2190. This could be potentially R1. We're going to be looking at a few stocks today. After we finish off with the FX pairs, I'll be placing emphasis on Ford, UBS, and Amazon for reasons I will be mentioning in just a moment. So R1, R2, and then R3. Simply readjusting our chart to reflect the movement lower. So R1, R2, R3, we're going to be keeping parallel for future reference should the pair decide to move back to an upwards fashion. Let's just remove the end on ticker. And looking back, here we go. And we could place our support level at S3. If there is any pair that you would like us to go over, please just let us know in the chat. You can have a look as well. And we have S1. S2. And we have our new S3. As is usual, my own personal preference is taking the opening and closing. bullish and bearish candles as a sign of more significance rather than simply using the wicks. Some of you may be asking as to why I've placed R1 at this point. It's not a swing low, it's not a swing high. So what's the point of it actually being placed there? I think that at this point, R1 is the first line of resistance. It could be easily broken and moved higher. So for a bullish outlook for the pair, it would have to break above R1 and then breaking above R2. Simply breaking above R1 would not be sufficient for a bullish outlook. Why? Let's assume that the pair makes a small market correction higher, as we said before, given that the RSI could be reaching levels where it is oversold. A small market correction higher to even the mid-range of the Bollinger Bands, about 65 pips, would break above R1. So for a bullish outlook, it would need to break above R2 as well. On the other hand, for our bearish outlook to continue, it will have to break below S1 and move towards S2. I do expect a small market correction to occur at some point. So even if it moves slightly higher, if it comes back below, I would still maintain a bearish outlook. We're going to be looking at the dollar against the Japanese yen. So the BOJ's July monetary policy meeting minutes came out in today's Asian session. They showed nothing too major. Essentially, they said that the bank will be maintaining its ultra loose monetary policy and the Japanese economy is expected to recover moderately. We're still noting that it is moving in an upwards fashion, perhaps a potential upwards moving channel. But as we did with the pound against the dollar, this is still slightly narrow. So if it does break below or above, nothing too major. Whereas if it was of greater importance, perhaps at a point further back in time, that may have carried more significance. For example, around here, this could have been an upwards moving channel, carrying slightly more significance than a relatively narrow upwards moving channel. But nonetheless, we maintain a bullish outlook for the pair based on the fact that the RSI is running along the figure of 70, implying a bullish market sentiment, in addition to a technical basis. But from a fundamental level, as we stated yesterday, it is reaching levels upon which the Japanese government intervened last time in order to safeguard the Japanese yen. Therefore, if it does break above R1, at some point I would be personally expecting the government to intervene, perhaps pushing the pair lower. But for now, maintaining a bullish outlook. We're going to be looking at some stocks we mentioned earlier on, which is most noticeably Ford, Amazon, and UBS. So we're picking these three in particular. A, because of Ford. US President Joe Biden joined the picket line yesterday. So it's an interesting subject considering that employees, so UAW union employees, are asking for a 40% pay raise from Stellantis, Ford, and General Motors, in addition to a 36-hour working week, if I'm not mistaken, which I would personally agree with Tesla CEO Elon Musk, who stated that this may be slightly too much. If you want a 40% pay increase, you have had UPS, which is giving their drivers around 145K, subject to conditions. You're seeing these pay increases, and inflation is still far too high. If you're giving pay increases on a general basis, I still think that inflationary pressures will exist in the economy in the long run. UBS, on the other hand, we're looking at due to the fact that they're challenging the 1.8 billion euro fine that they were imposed by the French government for allegedly helping French clients funnel funds into Swiss accounts, thus evading potential taxes from the French government. So this would be interesting to watch today. In terms of Ford, we mentioned as to why. And for Amazon, the reason we're looking at Amazon is because they were sued by the FTC for allegedly abusing their monopoly on the Facebook marketplace. Amazon's marketplace, not Facebook. So how were they abusing it? Essentially, they said if you're not using our facilities and if you're not increasing higher costs, perhaps helping Amazon gain a bit more, then you're simply going to be put at the back end of the search bar. So your product may not even be seen or will be very difficult to be seen by potential customers, therefore decreasing competition. increasing costs to consumers and increasing the profits to Amazon. So, why is this interesting? First of all, it was noted slightly that the FTC was pursuing this path. It's not something that's surprising in a sense, as the FTC commissioner had hinted that they may be going after Amazon in the near future. But how could this impact Amazon's stock price? Before we go into the technical basis, let's speak for fundamentals. So, if Amazon is gaining a commission, let's say, from each sale made by an Amazon seller on the marketplace, and they're essentially enticing them to use Amazon's own facilities, so warehouses, transportation, etc., that's a net profit for Amazon. They're making money of people selling off their platform. However, if you're forced to increase competition on your platform, so lower costs, etc., you may be losing from your bottom line, therefore losing profit over the long run. In terms of technicals, it's broken below S1, 126.55. So this is now support turned resistance, R1. It also broke S1, so another support and resistance. So we're maintaining a bearish outlook for the company. We're going to be placing R1, R2, R3. Feel free to open Amazon's 4-hour chart on your preferred charting platform or MT4. We have S1, 120.65. We have S2. We're aligning this strong bullish candle with the wick and the closing of the bullish candle and the opening of the bearish candle. Instead of placing it here, so there are two ways we could look at this. One could have placed it around here, but then it's not validated by many opening and closings, rather just than a few wicks. If you take it at the start of this bullish candle, you're ignoring this swing high. You're also ignoring, if I'm not mistaken, the opening of this bearish candle. You're ignoring this wick slightly, and you're ignoring the closing of the bearish candle and the opening of the other bearish candle. So I'd rather bring it slightly lower, just to be slightly on the safe side. Strong bullish candle, confirmed by wick, and another two closes, opening and closing respectively. So this is my S2, 113.50. This would be S2. And then for S3, we're going to be looking for perhaps a swing low. I'm aligning this bearish candle with these three candles here. So the difference we have between S1 and S2 is roughly about $7, and then another 7 between S2 and S3, maintaining with our theme. On the other hand, we have about $8 and then $8 as well. So they're roughly equidistant between each other. This could even be 107. But since we're adjusting it slightly, let's take a closer look at support level here. Slightly floating in the middle of nowhere, so 107 maybe slightly too much. So 106.95 is slightly more accurate. Why? Because we're keeping in with the theme that we had mentioned before, but I'd rather it actually close. So let's just zoom in a bit more. I'm taking the closing of this bullish candle, the opening of this bearish candle, and the opening of this bearish candle as well. I want them to align. Instead of simply having it, let's say, for example, here, for convenience sake, so having it at 107, as we had before. 107 is ignoring the opening of this bearish candle and these two candles as well, and is not even touching this bearish candle. So insignificant, in my opinion, whereas 106.90, even 0.95 perhaps, much better. So let's just zoom out. We have 142. this slightly bigger. 134.80. Now, on Bloomberg, they were discussing the FTC lawsuit against Amazon and said that usually the stock doesn't really respond to the lawsuit by the FTC as was expected. I think they may be underplaying it a little, even though I also do expect that Amazon will be embroiled in prolonged legal battle and this may not be resolved soon. I still think that by the end of this, if they're found to be guilty, since this is still an alleged crime, still needs to be proven by in the courts, it could hit their bottom line, which could perhaps have some slight market worries. And then for S2, under 13.50. Under 6.90. So this is Amazon. Maintain a bearish outlook. We could even place downwards moving trend line from this swing high, moving to lower ground, RSI being validated as well. So we're also going to be looking at Ford, which we mentioned earlier on. On the 4-hour, note that the RSI is still near the 50 level. It appears to continue to validate our sideways moving channel. So maintaining a neutral outlook between S1 and R1, so 12.07 and 12.65 on a fundamental level. Personally, I think the fact that former President Donald Trump and current President Joe Biden have both gone to these strikes. The former president expected to speak to a group of workers as well, whilst the current president joined the picket line. I think personally it's a political stunt, gaining some political power, but it may place some pressure on Ford, GM, and Stellantis, but we're offering Ford and GM to potentially reach a mid-level agreement. So instead of 40%, for example, hypothetically speaking, they could reach around 30, 32, perhaps even 33. I think 33% would be a range upon it may be accepted by the union and might be accepted by the companies, but it's moving in a sideways fashion up until we have an update in regards to the negotiations between the companies and the union. If these strikes are extended and are prolonged, it may hit the profits of Ford and GM as well, which could weigh on their next quarterly earnings. Thus, the longer the strikes continue, the more bearish of an outlook I would maintain on Ford. If it is resolved sooner rather than later, we may see Ford slightly moving in an upwards fashion, or if there are news that progress is made, it may break above R1 and move towards R2. If we stay at the current status, upon which we're seeing some negotiations, but nothing too meaningful, with both sides being still pretty far away from each other, perhaps a sideways fashion. And now we're going to be looking at UBS, who is currently trying to overturn a ruling upon which they may be forced to pay 1.8 billion euros, which is quite a substantial amount considering UBS also took on Credit Suisse, who went bankrupt earlier on this year. So right off the bat, we're taking S1, closing of this bearish candle, opening of this bearish candle, and then this bullish candle. We could even have placed S1 around here. I wouldn't place it here. I'd have two options, one or two, but this is much closer to the price action at this point in time. So I'm keeping with 24.65. Let's make the lines a little bit bigger as well. Makes it easier for the eyes. S1 24.65, and then for S2, this for me is ideal. It may not be on the closing or opening figures of all the candles, but it does accumulate, or at least shows that there is a strong sentiment either for support or resistance, which having broken above is now turned to support at this point. 23.35 would be my S2. And let's bring it up, make it slightly bigger. And then for S3, around here, I'm going to be taking these two highs. As you can see, it jumped from this point and moved higher. So validating it may be slightly close to S2, but that is not an issue for me. My opinion, I think if it breaks above S1, it might meet significant, support at S2 before moving towards S3. So for a bearish outlook, simply breaking below S1 would do it for me. RSI is moving towards 30, implying a bearish market sentiment. 22.20 and 18. We can even add the Bollinger Bands once we're done with the technical analysis. And this is why I'd rather take the opening and closing of bearish and bullish candles. We have 1, 2, 3, 4, and 5 candles validated by a wick here, validated by a single wick as well. So I think this is a significant support level, resistance level. The first line of resistance that may be faced by UBS. So R1 at this point, 25.25. And then we could place resistance level at R2. We could place it either at the 26.10 level, 26.25 would be perhaps more appropriate. Simply look at how it's coinciding with this bullish candle, these dojis as well. And then for S3, it's an all-time high. And then for S3, we'd have to use, in my opinion, the wick. 28.85. Highest point that we have. So for a bullish outlook, simply breaking above S1 and then moving towards S2. Or we could even place S2 at 25.85. And then simply place R3 at 28.5, or we could bring it slightly lower. Instead of using the wick, I'd still rather use the opening and closing candles of the bullish, opening and closing figures of the bullish and bearish candles. So I'm going to be explaining as to why I've neglected or changed my opinion from having resistance here. Let's say we ignore the 25.85 level and we kept it as it was. The next point for R3 would have been at this wick up here. But the distance between the three levels may have been slightly too much in comparison to the support levels we have, because we have historical data. Whereas for resistance at R3, there's nothing too much to go on. So instead of having them very close to each other, this could still be a resistance level, does not neglect that fact. But the step upon which the stock price may have to take in order to move higher could be around this point, but is validated by numerous bearish and bullish candles, which is the 25.85 level. I'd be very interested to see what happens if the stock price reaches back up to this level. This would be very interesting for me. If it breaks above, I would expect it to face some resistance, as we said before, around here, and then aim for the final resistance level at R3 at the 26.65 level. So this could be the 26.65 level, then the 25.85 level for R2. And it's just making this a bit more easier on the eyes. Now we could be adding the Bollinger Bands as well. So we're keeping the 50 as the mid-range, 20 for the lower, and 70 for the higher. As expected, it's at the lower end of the Bollinger Bands, as there is a bearish market sentiment forming for UBS. It could face a slight market correction higher. So for a bullish outlook, given that we've brought R2 lower and have not kept it at this point, it would need to break above R1 and move towards R2, if not slightly making a break above or a clear break above R2. For a bearish outlook, simply breaking above below S1 would simply do it for me, aiming for S2 and then for S3. Now, we could also have a look at any other technical indicators. So for the, instead of looking at something else, let's just finish with UBS. UBS is interesting. They've taken on Credit Suisse. They've said to the Swiss people that they will not be needing the backstop that was provided by the Swiss government. So indicating that the acquisition of Credit Suisse is less costly or maybe doing much better than was previously expected. So they left that perhaps bank, quote unquote, of potential liquidity for the bank. But now they're facing issues of about 1.8 billion euros from France. If they do have to pay that fee, then what happens with their Credit Suisse acquisition? Will they have enough cash? Will they be able to fund their operations in order to complete the smooth transition that they've been saying? Or will they face issues? So that's the question. If UBS, in my opinion, is forced to pay that 1.8 billion euros, then they may have a small issue with their acquisition of Credit Suisse in terms of the transition process. So we might be maintaining, from a fundamental level, a bearish outlook. But the issue is that this court case is not new. It's been in the works for about a decade. So realistically speaking, perhaps not much of an impact. On a weekly basis, this might not be simply driven. This might not be simply driven by the announcement that they may have to face the fine, as they're going to be going into the courts, the French courts. This could be a small market correction lower. It's just moving higher and higher and higher. So it could be aiming for lower levels in order to gain some liquidity before moving again higher. May have reached a point upon which it says, all right, enough. Let's move lower. Let's take out some stops before moving higher once again. From a 4-hour, it looks like it's on the lower range, so it's moving for a bearish outlook. On the weekly, it reached the upper range of the Bollinger Band, so it might be due a market correction to the mid-range, which from macro perspective is our S3 level. So, based on the technical and the fundamental level, we're maintaining a bearish outlook for UBS. And with that, that does it for today. Thank you for watching and see you next time.
Everyone, my name is Emily and today we're going to talk about inflation. In a market economy, prices for goods and services can always change. Some prices rise while some other prices fall. Inflation occurs when there is a general increase in the prices of goods and services. It means you can buy less for €1 today than you could yesterday. In other words, inflation decreases the value of the currency over time. When measuring inflation, all goods and services that households consume are taken into account, including everyday items such as food and petrol, durable goods such as clothing, PCs, and washing machines, and services such as hairdressing, insurance, and rented housing. All these goods and services that households consume during the year are represented by a basket of items. Every item in this basket has a price, which can change over time. The annual rate of inflation is the price of the total basket in a particular month compared with its price in the same month 1 year earlier. In a healthy economy, annual inflation is usually in the range of 2 percentage points, which is what economists consider a signal of pricing stability. And there can be positive effects of inflation when it's within range. For instance, it can increase spending and thus stimulate demand and productivity when the economy is slowing down and needs a boost. On the contrary, when inflation begins to exceed wage growth, it can be a warning sign of a struggling economy as consumers' purchasing power will decline. Inflation impacts consumers most directly, but businesses can also experience it. As mentioned, when inflation rises too much and it is higher than wage growth, then households or consumers lose purchasing power as the prices of items they buy, such as food and petrol, increase. Companies also can lose purchasing power and see their margins decline when prices increase for raw materials used in production, such as coal and crude oil, flour, and steel. To respond to the rise in prices, companies tend to raise the prices of their products or services to offset inflation. This means that the products that consumers will buy will become more expensive. Statistical agencies measure inflation by first establishing the current value of a basket of various goods and services consumed by households, referred to as a price index. When calculating the rate of inflation over time, agencies compare the value of the index over one period to another, such as month to month, which gives a monthly rate of inflation, or year to year, which gives an annual rate of inflation. For example, in the United States, the Bureau of Labor Statistics publishes its Consumer Price Index, which measures the cost of items that consumers buy out of pocket. The CPI is broken down by regions and is reported for the country as a whole. Another measure of the prices that people living in the United States or those buying on their behalf pay for goods and services is the Personal Consumption Expenditures Price Index, which captures inflation across a wide range of consumer expenses and reflects changes in consumer behavior. Thank you so much for watching us.
Testing. Can everyone hear me and can everyone see me? Right, we're testing a new mic, so in case you can't hear me, right, let me know. Or if you can hear me, just let me know. We have this. There should be this thing where it's called a chat. Let me just send a message through. Yeah, see if you guys can see that message, right? This will be the main place where you can send any questions you have, right? For me, for Woon Hong later, right? Especially is when we're covering custom indicators and EAs, right? It's a very exciting topic. A lot of things to look out for and a lot of things to avoid. Right, you can use the chat section just to ask us any questions. We literally have another screen open here, monitoring the questions coming through. All right. Now, just a quick introduction, right? Today's webinar will be on, as I mentioned, custom indicators and EAs, right? There'll be a lot of different indicators and EAs, right? And that's why it's important for you guys to know that disclaimer, everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. All right. Now, I also want to encourage you that anytime you have questions, feel free to send it through. You don't need to wait to the end of the webinar to send the questions. You can send it at any point of time. And yeah, we will be able to respond to it pretty quickly. Okay. Ending off, right, before I hand off the time, I just want to point you to a few places. The first place is our IronFX VIP room, right? You can see it over here. You go to ironfx.com, click on IronFX School. There's this thing here called VIP room, all right? I will just copy and paste this link so that you guys can reference it. As long as you are an IronFX client, right, you will get access to the VIP room. And the nice thing about the VIP room is that we'll be putting in our research every day, right? What are the nice setups to look out for, where the potential trading setups to look out for, even some signals to watch out for. You can find it all in the live trading room. And at the same time, it's a place where you can practice your analysis, right? Practice makes perfect. You go in there, you can, maybe you're learning how to draw trend lines, maybe you're learning how to draw Fibonacci or harmonics. It's a place where you can come in and ask us questions directly. Not a place will give you direct access to an award-winning research team, right? And when you ask your questions, that's where we can take care of you, right? We can answer you, or the last part is if you have any requests for a market forecast, maybe you are maybe you're trading euro dollar, and then we got a big news announcement coming up. You want our view on it. This is the place where you can ask us about it too. All right. So different amounts, different account sizes grants you access to different instruments within the VIP room. So yeah, IronFX might be increasing these values. I'm not sure when, right? But if you don't have an account already, now's a good time to actually jump in and get an account with them. All right. Now, back to the webinar, right? Today, a host will be Woon Hong. He's an investment analyst over here at Everest Fortune Group. He's also a prop trader at MyFund.fx, right? So it's his first webinar, so go easy on him, right? And of course, right, he brings with him a lot of insights, especially in the world of custom indicators and EAs, right? So be sure to pay good attention to today's session, right? I am a big fan of indicators or rather custom indicators, because I think the stuff that comes with MT4, MT5 sometimes can be a little bit lacking, right? So that is where, when you have a custom indicator, you can really you can try to extract more value out of the charts, for your so they can help you with your trading. All right. Now, without further ado, I'll pass on the time to Woon Hong to take you through today's session. All right. Okay, enjoy. I will see you and I see you.
Okay. Hi everyone. I'm Woon Hong, and I'll be going through with you the custom indicators and expert advices that we can find nowadays in the trading community. Okay, so our agenda will be what are custom indicators on MT4 and MT5, various types of EAs, where do you find them, how do you use them, and how do you backtest them? So what are custom indicators on MT4 and MT5? Basically, custom indicators is a program independently developed in MT4 or MT5 by the user and functioning as a technical indicator. Indicators are intended for relative simplifying of the complicated process of trading and decision making as well. The use of indicators allow us to answer the question about whether the current trend will remain the same or whether it will turn. Algorithms of indicators are also used for development of trading tactics and EAs. So one of the example of custom indicators will be this MA crossover, moving average trend, as well as ADX trend strength and higher time frame candlestick strength. All these indicators are combined into one custom indicator, and usually people would combine these indicators into one so that they are able to see the whole chart better and to have a better confluence as well. So we can see that for this particular indicator, it uses the moving average crossover trend following strategy. And this indicator has multiple confluences, such as the ADX trend and trend signaling on the higher time frames. This shows that custom indicators can be pretty flexible in terms of the confluences, and users can be creative with it if they decide to create their own indicators. By creating your own indicators, you could, later on, I'll explain more when I'm talking about where do you find these indicators and how do you buy them. So there are various types of EAs in the market right now, and these are the more popular ones, which are scalping EA, news trading EA, breakouts EA, and lastly, hedging EA. Different EAs has different trading strategies, and let's take the news trading EA for example. It automatically places trades based on important news releases such as NFP, FOMC, and CPI. So one of the yesterday we just had a CPI news, and let's say we are using a news trading EA. The bot will take the news. It will take into account the results of the news once it is released, and it will automatically place a trade for you. Yeah, so actually these EAs are relatively useful for beginners. However, if you are a more experienced trader, you would rather avoid these EAs as Usually these EAs only work for the short period of time. So next, where do we find these EAs? So you could easily explore these EAs on the MQL5 marketplace. Just simply search for keywords such as scalping, and you could see most of it in the market as well. A few tips that I would like to share with you would be to purchase this EA from sellers with excellent reviews, and also do read the customers' reviews for the specific EAs that you want. Also, do not be fooled by the advertisements, as there could be advertisements for these EAs on Google itself. And there are a lot of scam EAs whereby they will make you buy these EAs and then you'll work for a short period of time and then you'll just burst your account in the long run. Yep. So please be careful when you are using these EAs. However, there are definitely useful EAs in market as well. But you should always test these EAs on demo accounts, and most of them are, however, payable, usually on a monthly basis or a one-time fee. So let me show you guys an example of an EA. So let's just head to MQL5 Marketplace. Okay, as we can see from here, the market will show different trading strategies, EAs. So let's say we are looking for experts. Yeah, and then there'll be, for example, one of these EAs, and it's very expensive. Oh yeah, but this let's take this EA as an example. Even though it's 2.2k USD, however, this EA is relatively popular in the market, and I've seen people that have used this EA or similar EAs to gain a profit. Yeah. Or next example, let's say we want to search for scalping, and there are many EAs that are quite affordable, such as like 30 USD, 190 plus USD. Yep. So all these EAs can be easily found on the marketplace itself. And yeah, another way that you could find these EAs would be Fiverr. So Fiverr is a great marketplace as well. And once you are experienced enough with trading and you have a specific strategy in mind, you could look up coders on Fiverr that specializes in trading on, that specializes in coding on MT4 platforms and explain your strategy to them. Through my experience, the coders are extremely helpful and knowledgeable as well. And furthermore, you could also have them license your custom EA and do a white label service. What a white label service means is that you could license your EA and then sell it to other people, and they could then sell it to different customers, and you could gain more revenue from there. Yeah. So let me also show you an example of how it works. So let's say yeah, so let's look at one of the sellers here, and it's we should also always look for this icon, which is Fiverr's Choice, and they could show the different coders that does experts, EAs, indicators, and development service as well. And let's say they have different pricing. So however, we'll not look at the pricing for now. We'll just look at what they can create. So they could basically code all these strategies that you want, and you could have a conversation with them and to make sure that your strategy is put into place well, and you can basically, and it basically auto trades for you. Yeah. Okay, moving on. How do you use them? So basically, the step one will be the easiest, will be transferring your files. So basically, you have to select and copy the EA file that you wish to install, and look for the MT4 folder over here, and look for this important folder, which is experts, and you can copy and paste the EA files into this experts folder. Next, how to install the EA on the MT4 platform. So once you launch your MT4 platform, it'll look like this. And you should look for the expert advisor section, which is basically under the navigator panel on the left-hand side. And you can click on this small little plus sign, and all the available EA should be listed there once you have copy-pasted your EA file previously. And then click on the EA you want to install and drag it onto one of the charts. For example, this Euro USD chart. The last step will be adjusting of the EA settings. So basically, when you are using an EA, they'll have different settings for the EA itself, and some EAs will have complicated settings, and some EA will be relatively simple, such as this EA. Let me show you an example of a complicated EA setting. Oh yeah. Okay, so let's take a look at one of these EAs. So one of these EAs, let's say you have a strategy, and this strategy is quite complicated. Then your settings will also be kind of complicated. For example, you can lock your profit, setting trailing stop, setting spreads, setting orders, setting lots, and then you can adjust your settings and play around the settings on your demo account, so that when you're on a live account, you can actually figure out what works best for you and what's best for the strategy itself. Yeah. So how do you actually backtest these EAs? Backtesting and forward testing is extremely important when we are trading. And as much as these EAs which can trade automatically for us, however, we should still conduct backtesting on these EAs in order to know that it works well. These are informational videos on how to backtest EAs on MT4, and it explains in detail on how to do it. And last but not least, at the end of the day, indicators and EAs can act as a tool in our trading journey. However, we should not be fully reliant on it, and we should also learn how to use price action and different market structure and all, because EAs can definitely bust an account if the market is very volatile, such as when there's news and etc. Yep, I'll send the link over for the informational videos on how to backtest EAs on the MT4. Okay. All right. So after going through all these slides, are there any questions that any of you would like to ask regarding indicators or EA? Is there any? Oh, okay. So, basically, before I even started trading manually, I was using EAs as a start. Let me show you an example of which EA that I use. Um, where is it? Oh, I think that they have changed their name, but let me see. Let me look at this for a little bit. Um, I mean, it could be this, but basically, I was trading gold itself, and wait, let me see this. Let's see. Hmm. Mm. Oh yeah, this is kind of similar to what I used in the past, because it follows the trend following. Basically, is when I was trading gold, I was scalping a lot and using hedging as well. And then once the EA will advises me to trade in either direction, uh it will probably choose the better one, in which, let's say, it's a very strong buy trend, then it will enter more buy trades for me. However, I also explored different strategies such as martingale, which is pretty bad. So yeah, in my advice, don't really try to use the martingale EA, as martingale will double your lot size each time you are losing, and then most of the time for smaller accounts, it will not hold the small accounts. It will just bust the small accounts. Yeah. But if you are looking to explore different EAs, I suggest you can try, for example, this free demo. Like most EAs, they'll give free trials for you to try it out instead of just buying it for 50 USD. So you can try different EAs and then maybe see which one works best for you. And yeah, and also from my experience, I actually engaged a coder previously on Fiverr, and I'm not sure if he's still here, but I paid maybe 300-400 bucks just to code one of the EAs, and then my strategy was quite simple. It's also following the trend itself, and to come up with different support and resistance lines, so that whenever it breakouts, or whenever it's bouncing on a support or hitting a resistance, then it would trade accordingly. And basically, I sold these bots to different people, and that's how I traded. That's how I started my trading journey. Yeah, but once COVID hit, such as like the market being unstable, the bot wasn't really working as well. So I stopped using the bot and advised my clients to stop using the bot as well. Yep, but sometimes the bot has different settings. So if you decide to play it safe, you could set the settings maybe 0.05 lot size for maybe 2K account. Usually people start off with a 300 USD account or 1,000 USD dollar account. However, the lot size would range from 0.01 for the least risk, or up to 0.08 or 0.1. Yeah, because for EAs, usually they will enter multiple trades on a daily basis, and not like us. For example, I'm trading manually. I usually enter maybe 2 to 3 trades in 2 days, but the bot can open maybe 10 to 20 trades in 2 days. Yep. So that's the difference between expert advisors and us. Yeah, because EAs itself, they'll actually open multiple trades and with smaller lot size, and this is to stack the account, so that if you're following a bullish trend, the bot will actually keep buying until it hit a major resistance, and then it'll stop buying. Yeah. Are there any other questions? Okay. Okay. If there aren't any other questions, that's the end of the webinar itself. Thank you for listening to my webinar and being so patient with me. And last but not least, disclaimer again that this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So I hope this webinar will be useful for you and you could learn more about different custom indicators and how to use EAs and what kind of EAs that you are interested in. If there are any questions or that you have or that any questions that may arise not in this webinar but like you're just curious about different things, you could ask from the trading room itself or even look out for ideas that we may share in the VIP trading room. Yep. Okay. Thank you, everybody.